Good morning, good afternoon, good evening, and welcome to the Thursday, 23rd of February, Bull versus Bear webinar. Steve Miley on the call here for Trade Day. Welcome everyone to this slightly earlier running, 30-minute earlier running. If you're catching it on the recording because you didn't realize it was earlier running, I did post it in the trading room, in the forum, on the heads up. So slightly earlier running webinar in here. It's always going to be truncated. It's going to be a shortened webinar in here, kind of. Have a few commitments I need to take care of in here on my side. So that's why it's earlier and that's why it's going to be shorter. There's not a huge amount to say despite the Fed last night. We will run through, though, all the macroeconomic, fundamental, geopolitical, central bank events, data events we have coming up. And I'm not going to have much time to have, but it'll be a very brief look at the charts. I'm just going to point you towards. I pretty much summarized it in the market commentary anyway, so should be looking at that. It's all there in black and white if you want to read it, but I'll have a quick run through on that. So first of all, let's look back in here. So S&P ends down as Fed minutes fell to halt losing run. Well, they did end up down, but I mean hardly, right? But the minutes came in pretty much in line. I think the market has been building itself. We've seen the market pivot more hawkish as the Fed have kept reiterating higher for longer, right? The market was ignoring it. It was looking for moderate rate hikes, slowed rate hikes, moderate rate hikes, and even a rate cut at the end of the year. What we've certainly seen in here, okay, is the market and the Fed aligning. So the market has shifted to understanding the Fed's more hawkish tone. They're not looking for the dovish pivot this year so much as they were. Okay. And so, and that's been, I think there's an article that says that, right? Where is it? I think from in here, from Bloomberg. Oops. Let me just see in here. Yeah, here we go. Look, US futures rise as Fed aligns with street wages. Yeah, look, so dollar went down. It's been rallying on the back of this kind of perceived more hawkish shift. Yields, we've covered this all in yesterday's webinar, right? Yields spiking higher to their highest points on the 10-year since November. Global central banks reiterating this. Rates going higher. The data are all pointing to a strong economy for potential higher rates, maybe a higher peak in rates. I'm certainly not looking for a cut, higher for longer. Okay, that's been the mantra from the Fed. That's what the Fed have been telling us. But then the Fed delivered yesterday in the minutes. What did we hear in the minutes? Well, we heard in here. So even though we did get S&P ends as Fed minutes fell to halt losing run, but say Fed minutes did say almost all agreed to a 25. Okay, and then the those are looking for the 50 basis point hike are non-voters. Okay, so there is unanimity in here for a 25 last time and probably then for 25 next time in here. And if we look at what we're pricing in now, the shifting here is we are starting. This is falling, right? This is the 25 for the next meeting. Okay, this is growing, the 50. This has been pushing higher. If I just step in now, go to the 500, those two in here. It's these in here. So what you'll see in here is this is growing, right? So it's basically nailed on. We're going to get the 25, okay, but this has been growing, okay, for the 24% now chance. Yeah, so this has been increasing and increased further yesterday, even though you would say that the minutes came in relatively, well, not dovish, but certainly dovish for the next meeting from where the hawkishness. What is interesting though, I think, and I've been banging on about this, that, the higher has been taken into consideration, okay? We were pricing in only going up to 500, 525, okay? We've been more recently, pretty much since the beginning of the month, since the employment data, since the CPI data, pricing in another 75, so up to 525, 550. Here we are in June, 525, 550, July, 525, 550, September. What the market hadn't been pricing in is higher for longer, okay, the longer bit, okay? And they were looking for a cut at the end of the year. Let's go to the end of the year now and look. 525 to 550 and 500, 525, almost the same. There's only a slight chance of us cutting back. Yeah. So the chances are we're going to go up to 525, 550. If we look at November, that's still the peak in here, 525, 550. And then only a slim chance now of us cutting rates. Okay, so I think that's interesting. The market started to price that in higher, the longer bit. Okay, we've been pricing in higher, now the longer bit. Okay, so even though we did see a slight drop, okay, I think a lot of the negativity, a lot of the more hawkishness has been built in, and the markets are starting to react. So we have had so look, Fed minutes show openness to higher rates end game, but they're becoming more aligned. US futures have bounced in here this morning. Fed aligns with street wages. Now, if I go to my outlook in here, though, oh no, I'm going to get that. Let me quickly open that before I get myself streaming. And there we go. If we go in here, what we'll see in here is I'm still staying bearish, because it was a really we didn't have much of a bounce last night. We had a bit of a better bounce, but I'm still looking until we start to clear above resistances. So here at 40.35 and a quarter. Okay, until we get above there, if we go and take a look at the 15 in here, we're still way below there, right? So until we get above 40.35 and a quarter, I'm still seeing this in negative. Yes, we've had a very slight bounce, but it's been a slight bounce. We minimally need to get above the little overnight peak around 40.25, but really 35 and a quarter to start to ease the negativity in here for me. Whilst below there, I'm staying negative. If we get above there, then it shifts slightly positive, okay? And if we take a look at what we've got on the NASDAQ, oops, sorry. We'll get there in a second. On the NASDAQ, it needs to be 12,228. Okay, that's where we need to be. If we go and take a look at where we are on the NASDAQ. So minimally, you can see we have put in this kind of little base in here. We've kind of nudged up that 12,228. I think we've been right up there, right? We're still capped below, though, I think. 12, what's been the overnight? 207, I think so. 226, right? 228 was my level, okay? So 226 we've been up to. Okay, so just below that. If we get above that 228, though, then I'm willing to shift it to more positive. So clinging to a negativity, we are seeing signs of a basing. Today could easily be the shift day, okay? So despite in here, on my reports in here, staying bearish. If we clear these first resistance hurdles, 12,228 and 40.35 and a quarter. Okay, you're watching those two levels in here as resistance. If we get above those, I think we can put in a little base and we can pop higher. So that's my kind of technical outlook. Let's run through some of the macro in here. So US futures rise, Fed aligns with street. We've already spoken about that. The headline there. S&P, it did end up down on the day, though, with inflation still the focus. Fed minutes show openness to higher rates. This is all Fed. Stock US futures rise, as we've spoken about that already. Eurozone core inflation at record, set to embolden ECB. So even though we've got another slightly more dovish shift in here, well, not dovish, it's not been a dovish shift, but the more hawkishness that the market start to build in, we're coming together with the Fed, right? So there wasn't any more hawkishness, an overly hawkish tone coming from the Fed yesterday, okay, last night or yesterday afternoon from the Fed. So we're coming more aligned, so we didn't see that risk-off move that we've seen of late reinforced. However, we do see ECB look very like to lift deposit rates to 3% in March and continue higher, okay? So the Eurozone core inflation at record, and then we go and take a look at the data in here. Here's the CPI data. Look, most of it coming in line, but the year-on-year data in here above expectations. So still in here, upside pressures, record highs in here. That's going to keep the ECB in a hawkish mode. What do we have today? GDP, very backward looking. It is preliminary data for Q4, so that's more important because it's the first set of data we have rather than final data. However, it's Q4, right? A lot has happened since Q4, so how important it is, I'm not so sure, okay? But we're watching out for that nonetheless, okay? Probably more important, Bostic speaking at 10:50. Does he give any reaction, anything to the Fed minutes, anything to the more recent data that we've had? So watching out for Bostic at 10:50 Eastern time today. If you're trading crude, remember, as ever, the weekly crude oil inventories data from Cushing we get at 11 a.m. What else do I have for you today? So morning bid, the new R-star, higher inflation is here to stay. In here, we're certainly seeing in here a new expectation for higher inflation. Blue chips cheered up. Nvidia doing a positive, putting in a positive in this morning. In here, Eurozone inflation marginally higher in January. We've spoken about that already. UK retail sales flat in February after January full outlook gloomy from the CPI. That's from the UK, so that's not particularly positive in here. And if we look at European bourses, though, are bouncing this morning. The FTSE is down on that CBI PPI data, okay, but the European exchanges are actually higher. DAX and the CAC, the German and French indices. If we take a look, okay, that's the wrong tab. Let me go to the US indices this morning. If we go and take a look at the US indices this morning, what do we see? We'd see a decent bounce, okay? In fact, the NASDAQ leading the way back higher, up 0.86, and that's primarily because the NASDAQ was the big sufferer because of the yield move. And if I go and take a look here on the yield chart for this morning, let it load up just a second. We are seeing a slight, it's only slight in here, but I mean, I think you need to watch this. I think this is really important today in here, looking for yields. If yields can push back down lower, okay, it's going to certainly help the NASDAQ. And you're looking probably for it to start to undercut yesterday's low at 389 on the 10-year. So watching that, I think if you're trading stocks, I've already outlined the levels in here. I would have an eye on the future in here as well. And on price, okay, above yesterday's peak. And we're pointing still lower in here on the 10-year note, this is the 10-year note future. But really, if we can get back above 111.14 and a half, that little peak there from yesterday, if you can get above there, that's going to certainly ease some of the negative pressures for the 10-year, and I think that will be positive, particularly for the NASDAQ. So watching this, if we start to push down into lower yield, lower price, higher yield territory again, you could just see all this stock rebound. Remember, I'm staying bearish on stocks until we get over those resistance points that I've outlined in here. 12.228, and then 40.35 and a quarter. Whilst below there, I'm hanging on to a bearishness. If we get above there, small bases go in, and then we can open up upside. Okay, so a bit of a whistle stop tour. Apologies for the speed of that today in here. I do have a commitment that I need to get to, so hence the early start. There's no webinar tomorrow, remind you of that. We're not able to cover the webinar tomorrow, so no webinar tomorrow. My apologies for the speed of today. So we are, I'm setting up still we're in semi-risk off tone in here for me until we clear those resistance points. If you clear them though, we can get some aggressive short covering. The market has got itself short, I think, over the last 48 hours. We've seen notable sell-off this week, and I think we could see a little bit of a short squeeze, but it needs to clear those resistance points first. And the market not showing that, as I said in here, if you're trading the equity markets, I think you have to keep an eye on the bonds as well, because the latest move lower in stocks has been driven by the lower price movements, higher yields in the treasuries. If we can start to reverse that on the upside, it's not showing any signs of it this morning. If this goes lower again, that we're going to that bearish theme that I still have on stocks remains intact. I think though we could see some short covering, given that the Fed wasn't as hawkish as they potentially could have been in the minutes from last night. All right, guys, that was a bit of a whistle-stop tour around the Fed minutes and what to expect today. I say no webinar tomorrow. I'll be back with you on Monday for the next Bull versus Bear webinar. Until then, take care, stay safe, and have a great trading day. Bye.